By now, you've probably heard the stat that housing affordability is at the lowest point it's been in nearly 40 years. Over the last couple of years, the median sales price has jumped up to around $400,000, and with rising interest rates, the average home is not really affordable to the average American, at least in most of the markets across the country. But there are still good deals to be had at reasonable prices, and I actually found 5 great markets where the median sales price is less than half the national average. So that means they are less than $200,000. I used a few criteria to pick these markets. Here they are. First, median sale price, like I said, had to be under $200,000. The second thing is that the sale price has to be up year over year. As you all probably know, we are in the midst of a housing correction, and some markets are declining and have over the last year, while other markets have stayed pretty stable or strong, and I only picked markets that have seen positive home price appreciation over the last year. And then third, I looked at some lead indicators for what might happen over the next couple of months. Of course, we obviously don't know exactly what's going to happen, but you can look at some measurements of supply and demand like inventory levels, new listing, and days on market. And so I picked ones that this is subjective, but I believe point to a pretty competitive marketplace for the summer where prices might keep going up. And then lastly, I also looked at population growth, rent, and some cash flow potential. So I looked at all these different variables. Before we get into these 5 markets, you all know how much I absolutely love data. But to get good deals, there's really only one data source you need, and that's PropStream. PropStream helps investors find motivated sellers in any market across the US with hundreds of different filters you can use to find the perfect deals for you. You can search both on and off market for properties. You can run comps, get in touch with sellers using these built-in marketing tools that are super easy to use, and you can analyze deals to your heart's desire. When inventory is tough to come by, like it is right now, PropStream is the key to finding your next deal. Check them out at propstream.com/BP. Now, for our 5 great markets where the median sales price is under $200,000, I'm just going to go in descending order. So the first one's going to be the most expensive and go down to the least expensive, but they're not ranked in any particular order. For our first list, it is Syracuse. And like I said, that's the most expensive city on the list with a median sales price of $196,000. So again, most expensive on this list, but about half the national average. Syracuse is really interesting because it remains very competitive. It's actually one of the more competitive markets in the entire country. I'm saying that because there's this really interesting metric called the sale to list ratio, and that basically measures how much over or under the listing price properties sell for, and Syracuse is still over 100. The vast majority of markets in the country right now are under 100, meaning that people are bidding under asking price, but in Syracuse, it is still a strong seller's market where the sale to list ratio is over 100%. So this is one of the reasons, remember I said that my criteria were that I saw lead indicators that suggested prices are going to keep going up. This is a strong lead indicator that it's going to be a competitive market over this summer. We're also seeing days on market, which are rising nationally, declining in Syracuse. And so it points to a really good market that is relatively affordable. Just over the last year, prices have gone up 11%, and it has a really strong cash flow potential. When I say cash flow potential, I use this sort of rough metric called the rent to price ratio, which basically just combines the median rent in the area to the median sale price in the area. And it gives you a rough idea of if there are going to be good deals in that area that offer strong cash flow. And generally speaking, I like to think that if a whole area has a rent to price ratio of like 0.65 or above, you're going to be able to find cash flowing deals there. If it's below, it's still possible to find cash flowing deals. It's just going to be harder. And so when I look at Syracuse, I see a market that's affordable, growing quickly, and has really good cash flow potential. The second city on our list is Lansing, Michigan, with a median sale price of $191,000. And again, prices are still rising here, but at a more reasonable rate. In Syracuse, prices were going up 11% year over year, as you remember, which is well above normal. And in Lansing, they're at 6.3%, which is still above normal, but it's getting to within the realm of reason. And personally, that's what I would like to see, is the housing market return to a time where prices go up 3 or 4% or about the pace of inflation. And so that's what we're seeing in Lansing, which to me points to a pretty stable housing market. The thing that really stands out to me about Lansing is that inventory, the amount of homes that are for sale, is absolutely in the basement. It's been going down over the last year, but when I compared inventory right now to the same time period back in 2019, just to get a sense of like how things have changed over the course of the pandemic, right now there is only 44% of the inventory as there was back in 2019. So there is basically nothing for sale in this entire city, which has contributed to prices continuing to go up. Another thing I really like about Lansing is that population growth is pretty strong at 0.6% per year, and there is a solid cash flow potential with a rent-to-price ratio of 0.73%. For our third market on the list, we have Scranton, Pennsylvania, of course, the home of the famous Dunder Mifflin, with a median sale price that drops down pretty considerably to $176,000. And the crazy thing about Scranton is that inventory, which has been low sort of throughout the pandemic in all sorts of markets, has dropped basically off a cliff this year. It's fallen 45% this year alone. And if you've been following the housing market on a national level, you would expect inventory to be going up, at least on a national level this year, when interest rates are going up. That pulls demand out of the market. That means that more homes are usually sitting on the market, and that pushes inventory up. But inventory is falling pretty dramatically in Scranton right now, which means that there is likely going to be a very competitive buying season over the summer here in Scranton. One of the things that's going on in Scranton that's kind of weird, despite the low inventory, is that the list to sale ratio, remember we talked about that in Syracuse being over 100, is the lowest on our list at 97.5%, which means that even though there's not a lot of stuff on the market, people are still bidding under asking price and are still able to get it. So I see this happening in a lot of markets where prices are still going up, but the list to sale ratio is off, which just means that sellers are probably reaching a little bit with their list price. They want to, get their best price, obviously, and it's well above where it would have been last year, but it's a little bit too high. And so buyers are able to get under list price, but still well above where it was last year. So if you're considering buying in Scranton, just take note of that, because it means that you probably have an opportunity to offer below asking and hopefully negotiate with the seller despite low inventory. For our fourth market on the list, we've got Toledo, Ohio. Median sale price, $173,000, and it has gone up 6.1% over the last year. Just like a lot of our other markets, the lead indicators in Toledo are strong. Inventory and days on market are shrinking here, which means there could be further price appreciation in Toledo over the coming months. And even days on market, I just said this, but even days on market have fallen over the last year. And that is very different from a lot of markets that we're seeing in the country right now. Days on market is just basically a measurement of how long the average property in the market sits on the market before it is put under contract. And even in markets that are doing well and have price appreciation across the country, days in market has been ticking up as buyers have been a little bit more patient. They're not submitting blind offers without even seeing it anymore. They're being, there is some return to normalcy here. But in Toledo, we're actually seeing days on market fall, which is unusual and again suggests a competitive marketplace. The one thing about Toledo you should know, though, is that rent here is only about $850 a month on average, which makes it the worst rent to price ratio on our list of only about 0.5%. So that means that cash flow prospects are lower than the other markets on this list. Doesn't mean that it's impossible, but it is something to know. But on the flip side, Toledo has really strong population growth, suggesting that demand will continue well into the future. Last but not least on our list, we have Springfield, Illinois, which is the cheapest market on our list with a median sales price of $171,000. But this market has seen massive appreciation over the last year of 19%. We saw these numbers of 19, 20, 30% growth year over year back in 2021. But most markets have really started to come back down to earth, but not Springfield. It sort of got a late start on the appreciation boom, but it is still really hot, by far the hottest market on our list. New listings, the number of homes that are going up for sale is down 30% year over year. Inventory has fallen 39% year over year. So we've got like a full-on seller's market in Springfield, Illinois. And Springfield really has a lot going on for it besides the strong appreciation, which is always like a bonus for investors, but it's not necessarily one of the fundamentals you want to count on if you're going to make an investment in that market. But Springfield has a lot going for it from a fundamentals perspective, because it is tied, at least for the fastest growing population of any market on our list, with 0.6% year over year population growth. And the rent to price ratio is about 0.75, meaning there is likely good cash flow potential in the area. So there, in my opinion, is a lot to like in Springfield, Illinois. Those are my 5 opportunities for you if you want to invest in real estate and want to buy something that is $200,000 or less. I recommend you check out these markets. If you invest in any of these markets, both previously or thinking about it, I would love to know what your thoughts are about these markets in the comments below. And don't forget, head to propstream.com/BP to find motivated sellers nationwide so you can lock down your next real estate deal. I'm Dave Meyer for BiggerPockets, and I'll see you next week.